What's going on, everyone? My name is Merten here from DataDash, and today is February 17th of 2025. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I'm here to answer a major question on the minds of a lot of people in the crypto industry. After over 3 months of sideways consolidation in Bitcoin's price, are we finally seeing the signs that prove to us that we are at the end of a bull market? Does this imply that we are ready for a major 75-80% drawdown in Bitcoin's price, a true proper crypto bear market? Well, I want to go ahead and give you an answer that I think may surprise you. It is not an extreme on either end of the spectrum, but something that is grounded in reality according to the data, the inflow information we have, the price action analysis, as well as diminishing returns and a whole range of important concepts. We'll also be diving into altcoins as well, and also talking about the macro circumstance. We got a lot to unpack here in today's video. If you happen to enjoy it, consider dropping a like, grab a cup of coffee. This will be a jam-packed episode you guys won't want to miss. So let's go ahead and start off here, but just talking about the short-term price analysis. As many of you probably know, if you come here on the channel frequently, we hit on these vital points that signify trend, weakness, or strength. And mainly, that has to do with how price is reacting with the 21-day. Back here in October, we had the early stage cues that showcased a breakout was coming. And from that point, we rallied from around the mid 60,000 range all the way up here to $107,000 to $109,000. But since then, we have been having inconsistency at the 21-day. We've been seeing a clear chop here. This is not me trying to bash Bitcoin or anything. It's just pointing out a very clear difference in how the trend is playing out now. And instead of being well elevated above the long-term moving averages like the 100-day and 200-day, we are now seeing those averages creep up to where price has been trading for the last few months. And now we are seeing that between the 21-day and the 100-day, if the market is to choose direction, right now it's pointing more towards breaking below the 100-day rather than breaking above the 21-day, which has been acting as resistance since back here throughout the month of February. That is not a good sign to see. So this is our first initial kind of warning sign here. Without even looking at the data signs, without looking at all the other metrics we have available, that the market is getting a bit exhausted here, that supply and demand is coming back more into equilibrium, and that we may very well be in for a much bigger amount of sell side pressure to hit the market over the next couple of weeks if we cannot hold this 100-day. The next main key level here would probably be the 200-day, which pushes us down to the $80,000, $85,000 range. So this is important to understand here. The first thing that's already given us some worrying signs here is the price analysis on the short term. But over the long run, looking at the quarterly chart, so we are looking all the way back here to back in January of 2010. So this is a long period of time here that we're working with, right? Nearly 15 years of price action. And what we can see very clearly here in regards to the price is a couple of key trends. Right? We first see that with each given top to bottom expansion, you could also do top to top analysis. You might get slightly different results. For me, though, I like to look at peak capitulation, peak euphoria. And what we generally see here is that these expansions are generally diminishing each and every time from that peak point of capitulation, the absolute bear market bottom, to bull market highs. We can see that we went from around a 65,000% return here to a 12,743% return, to a 2,000% return between 2018 to 2021. And this time around so far, we've already seen an expansion of 617%. Now, I want to put into context here that while there is no absolute key essential multiple that every single cycle follows, what we generally see here is a clear trend emerging that essentially the diminished returns between each cycle, while they are still phenomenal versus other assets, I'll give it that, right? We're seeing about a fifth reduction here, right? Sometimes 1/6 reduction in regards to the percentage returns. But generally speaking, this gives us a ballpark here. We are seeing major multiple contractions versus the prior cycle in every new bull market. And if we take a look here, what we've seen so far, a 617% return is definitely beyond expectations here for what we should have expected considering the prior reductions. So this is already quite good here, right? And I mean this as a compliment here to Bitcoin, right? In the same way, I'll be honest with you guys in saying that in 2022 and 2023, I was very wrong about the Bitcoin ETF. We definitely were way too pessimistic back then, and the SEC slowly but steadily lost grounds and had to approve a Bitcoin ETF. So that essentially was a big upset. And as much as I'll say here where I got things wrong, I'm also not going to just sit here and toot the popular horn that everyone's saying that this is just going to go up and to the right. This is beyond, according to the price expectations and considering diminishing returns, beyond what we should have expected here. So the important thing I want you to keep in mind is that as markets are starting to stall, don't get too confident that the number's going up and to the right constantly. Because as we know, there are easily year, if not year-long, year-and-a-half-long corrections that we can see that can massively diminish some of those returns. Now, here's the important thing I want you guys to keep in mind here, which is that as we're going to go through the video, you're going to hear a theme of mine. And that is that I believe that we are at the end of a 4-year cycle expansion, especially other theories like expanding cycles, which we used to believe in. I think that irrespective of whether or not those cycles hold true, right? People disagree on it. Some people at the end of the day take it as fact. The main point I want to bring to you is that I really think that the era of predictable cycles for Bitcoin are likely over. The halving event is growing weaker and weaker and weaker in terms of its net effect on supply and demand difference for Bitcoin. We used to have massive inflation reductions with each halving event that created a supply shock, but now there are well over 20 million Bitcoin out of the 21 million that will ever exist already in circulation. So the halving event is losing its effectiveness. And outside of that as well, we also had really our big catalyst here, the ETFs. So what we need next is another major catalyst that's going to be able to continue the price expansion pressure for Bitcoin, which would be governments buying Bitcoin, central banks buying Bitcoin. That's really kind of the last thing I can think about, right? Trying to be as fair as I can. And I don't really see that happening in this environment right now, right? Maybe we see the United States government and other governments looking at a strategic Bitcoin reserve. We haven't seen any developments of that yet. Just to be completely fair, we've seen some talk about it, but we don't have much beyond that. So the important thing I want you to consider is that these things, not to mention, also take time. So that could be the catalyst for another expansion into the multiple hundred thousands later down the line. But it doesn't mean it's guaranteed here today. And it doesn't mean we can't potentially face a solid correction going over the next couple of months. Now, here's the thing. While I'm saying that, I also want to emphasize that this is not a bearish thesis here. What I'm here to say is that it's very likely we're not going to see these kind of 80% plus corrections. In fact, we didn't see that the last time around. We've seen diminishing corrections in regards to the pullback of Bitcoin's price during bear markets. And I want to emphasize that this is very important. It's just as equally important when we're analyzing the diminishing returns that we get in a bull market, because this could mean that we may not see anywhere close to what we see in a bear market. We may very well see, as we're exiting this kind of phase of bull markets and bear markets that are clearly defined by sentiment, we might see more moderate rallies in the future, and we might see more moderate corrections. So we might see something that could very well be in the 50% range this time around. A nice even 50% correction from the relative highs down to, say, 50,000. And that might be the base in order to continue forward into the future, where Bitcoin is becoming more of a mature asset. It's becoming more predictable in regards to its price, or not so much predictable, but less volatile as a play. We've already seen this here. This is already something that Bitcoin is doing throughout history. It's just that now we might even take it a step further and get away from the typical expansion window that we usually see. It might be a little more inconsistent, but still maintain that broader uptrend up and to the right. So again, this isn't a doomsday prediction. This is more than anything, I think, a very rational take on markets here. While a lot of people have gotten passively euphoric here, we are looking potentially for a correction if we get the breakdown in those price levels that signal that supply and demand has come to a crossroads where essentially there's too much sell-side supply versus the demand to purchase on the market. And this also leads me to talking about what's going on with the inflow data. We got to look at what's going on with the ETFs, what's going on with Microstrategy. These are the two big institutional conduits or vehicles where people are buying Bitcoin, where new money is coming in. And what do you see? Well, for the first 2 weeks of February, we have not only seen nowhere near the expansion of prior months, we've seen a net outflow. And what's I always find interesting here, again, I give props where it's due to HODL Capital here. He puts out a lot of these great charts, and we reference them in the videos. But one thing that really doesn't sit with me is that people constantly focus on GBTC. I see this kind of rationalization behavior and really ignoring some of the plain details in the data here when things aren't going in favor of Bitcoiners. They focus, oh, but BlackRock's iShare Bitcoin ETF added a little less than 5,000 Bitcoin. It's still ticking up here. While Grayscale, the evil GBTC product, is outflowing. Well, of course, people are doing that because as time passes, Grayscale knew this. Their fees are way too high. And essentially for them, they have a direct incentive to keep them there because they had such a large amount of Bitcoin, right? The main point I want to say here is that as GBTC is surely outflowing, the biggest number difference here is the reduction in the Fidelity-wise Origin Bitcoin ETF. So that's most likely what happened here is essentially either a net cancellation of new people coming in and people coming out of the Fidelity, new people coming into the BlackRock ETF, or it's just people cycling from one ETF to another, maybe because it's more favorable in the fee structure. Who knows? We don't know who these people are. But the main thing I want to say is that net overall, we have pretty much a little less than 5,000, probably around 4,000 less Bitcoin in the ETFs than we did 2 weeks ago. That's not a good look because this is where we need the inflows to come from. We certainly know that most long-term kind of holders or traders, there is much more sell-side pressure. We've seen that from the on-chain data from those who are holding those unspent transaction outputs in their Bitcoin wallet. We can see that the balances of a lot of those smaller accounts have been unloading, and the ETF has been the main consumer of that. If that ETF is no longer buying Bitcoin at an expansive pace, that is a really bad sign here. Another thing as well to consider is MicroStrategy or strategy, right? Strategy has been probably just as important than the ETFs over the last couple of months. We can see here there are many periods of time where MicroStrategy is acquiring more than the outflows of the ETFs or is pretty much on par. And what we saw here back in early February is a week of no additions. And a lot of people said, oh, but we came back here and had 7,600 new Bitcoin being purchased. If you spread that out over those weeks, right, to just kind of even it out because there were no purchases here, that's around, roughly speaking, around 35, 37, 50 per week. So essentially this whole huge expansion we had in November and December slowed down, and a lot of people were starting to think we were on the cusp back up. Another week of 11,000, another week of 10,000, the ETF inflows picking up. But really, we're starting to see a slowdown again, right? Again, that's not me trying to be negative, guys. I mean, I wish I could go out and buy 7,000 Bitcoin. I wish I had that kind of liquidity. That is still a monstrous amount of money. But in the grand scheme of things, right, this is not a large sum of Bitcoin here, right? We need to be very candid here. This is very different from the environment we had back here, where literally within just a matter of 2 months, predominantly a month and a half here between November and early December, we saw massive inflows, hundreds of thousands of Bitcoin being purchased, and obviously playing a big role in the price that we saw, price action we saw between here in October to November and early December. That is why we went from this mid $60,000 range up here towards 107,000. So it shows just how much is required to get us to the point where we are now. Question is, if we do expect higher price levels, if we do expect for price to get above that 21-day, how much inflows are we going to need? Where is the money going to come from? Is it going to continue to come through MicroStrategy? Are more, creditors in the debt markets going to take on their convertible notes and the risk associated with them? Or are they not going to? And MicroStrategy will not be able to be that support leg. Will ETF inflows continue to remain relatively dry as they've been here in the month of February? These are all very important questions to keep in mind, because that velocity of expansion through these wings of inflows in the market are the absolute biggest determining factor here. And it has made up a large amount of the current holdings of Bitcoin as well. So that's an important dynamic to keep in mind. We're not even really questioning whether or not we might see an unwinding in these things, which we already started to see in the ETF here over the last 2 weeks. Now, I'm not trying to be a doomerist about it. I'm just trying to say here in the short term, there's a clear correlation between the inflow and outflow data and Bitcoin's price. Another thing to consider, we don't look at it much as we used to here in this channel, but data science models do hold some relevancy here. And even for those who would have said, back when I was pointing out here the data science models, again, in the same way, the four-year cycle and expanding cycles, as that's going to probably diminish in value. Data science models aren't absolutely perfect, but the thing is that they have at least the ones that we have here that are utilized within the cbbi.info index. This is by Colin, another crypto YouTuber. Really like this index here because it combines a lot of them together. the main point I want to showcase here is that this index has showcased really since back in March of 2024 a very similar setup to what we saw back in 2013. Not only have we just gotten above the 80% window here, which means that really a lot of the returns have probably been made in the market from that bottom entry point, right? Doesn't mean that it can't continue a little bit higher here, right? We can see, for example, in 2020, right, when we were at 33,000 and went all the way up still to 63,000. We could see here when we hit 80 for the first time, Bitcoin was at 4,600 and it went up here 20,000. And we can see here again as well in 2013 when we got to 80, this was just a segue point for the broader expansion from a relative high of 213 up towards 1,100. But the main point here I want to signify is that if we take a look here this time around from 82 and the next retest, right, we've essentially had a 50% expansion. Again, great visualization of decaying returns. And what I want to point out here more importantly is that not only have we made the broader expansive move here, we're well past the halving event now. We've had some time here for the halving event to be baked in and provide its benefit price. I'm seeing a lot of similarities here to the secondary high setup that we had in 2013 into 2014 that essentially played out back here more than a decade ago. I'm seeing exhaustion in the market. I'm not seeing the kind of absolute euphoria we had back then that will really allow for massive multiple expansion. And that makes sense because the market is getting to a pretty saturated point. If anyone wanted to buy Bitcoin here today, institutional capital can do it through the ETFs or Coinbase Institutional or a variety of crypto exchanges that give you the primed offer on-ramps into the space to inflow millions upon millions, if not billions of dollars. You wanted to buy also as well before the ETFs. Microstrategy has been around the block for a while. It's been a de facto Bitcoin ETF. Retail traders have had access to Bitcoin for the longest period of time. It is well known. It is, at this point, a social norm to understand what Bitcoin and crypto is. There might be some people who don't know about it, but anyone who's really genuinely interested probably knows about it now. So this is my point here, guys. It's to be honest here, that it doesn't mean Bitcoin can't go up and to the right. It doesn't mean that after a correction, we can't come back up and reach new highs. My point here is that while the number goes up and to the right, there are periods of time, and we know this historically through the data science models, through price action, through just sentiment analysis, that there are corrective periods in markets, right? And this is just something to know about and to be honest about. And I want to bring up this kind of news story that happened here. I'm not here to bash Javier Milei because not all the details are completely relevant. This is still a developing story over the last couple of days. But many of you probably have heard by now about the exit scam, this meme coin that was promoted by Milei, that essentially, one of his staffers had misled him on and got him to promote, and then he essentially exited it with it. That sounds potentially believable. Maybe it's not the case. Irrespective, this kind of activity, these kind of quick, get rich quick meme coin launches have absolutely absorbed any retail liquidity that could have provided that additional backbone into the market. If the institutional capital is waning, we got to lean into retail liquidity at this point. We got to still hope that people are really going to be able to build long-term positions in crypto. Well, unfortunately, they're leverage trading. They're speculating on meme coins and AI agents, and they're falling for crypto rug pulls that are just absorbing tens, if not hundreds of millions of dollars of this new liquidity coming into the space. You add that in with leverage trading exchanges, you add that in with all the other baskets of meme coins, all of the other different types of scams, rug pulls, wallet hacks, etc. It's just completely robbing people of their liquidity, and it's robbing the market of having that sustained liquidity that actually allows for Bitcoin to continue expanding long term. My main point here is this, guys. There's a lack of fundamental belief in a lot of the crypto space. There's a lot of crap like this going on in the crypto space where high-level officials are being played, if that is the actual narrative here. If it means that Milei was in on it, that just shows how shitty the industry's gotten. Sorry for my language, but that would be terrible. That would be terrible for the new Argentinian president to actually do that. If it isn't the case, and he really is well-intentioned and just wanted to support something and didn't make a dime from it, right? It doesn't really matter because high-level officials are being played here. And this is really a bad look for the industry, that this is all we have to show for since back when I started doing this channel in 2017, right? It means we got to have a real wake-up call here. And there needs to be some serious reconstruction in the crypto space and an actual real soul searching in this industry. I take as well a look here at Ethereum, right? This is the point where I really would love to see Ethereum show up here in the ETH to BTC ratio. And it looks like we might have a chance at that at the 21 day. But if we come up here and face resistance at the 21 day again, after a massive 73.6% decline in Ethereum, what is that telling about the industry, right? And the future of DeFi and all the actual fundamental things in the crypto space that actually might have some semblance of value, right? What will that tell about the direction of crypto long term? Again, don't want to be too bearish here. Let's see how we act at that 21 day. But so far, it's just not really showing up here. Solana as well, right? Down from its relative peak here, just back in late January, about a month, less than a month ago, at 0.00282 against Bitcoin. Now all the way down here to 0.00191, right? That's a huge percentage decline here in a very short window of time, about 32% correction here. And from the relative peak back here in March over a year ago, we're down about 38% and getting very close, mind you, totally within the realm of possibility to test in that 200 week. If that doesn't hold, that's going to spell very bad news when it comes to Solana. The main thing here I want you guys to keep in mind is just taking a look at some of the different metrics we have for altcoins, right? It's one thing to look at Ethereum. It's one thing to look at Solana, right? We need to look at the broader trend here in the space. And that is that at the end of the day right now, when we take a look at some of the important measurements, like, for example, total 2 dominance here in the market, total 2 divided by total, right? We're looking at the entire crypto space here, right? Excluding Bitcoin, right? We've got about 39% dominance here. If we look historically, we've got some clear ranges here between 60% and down here at 30%. These are big psychological levels for market ownership. And while we are here at the 100-month moving average, and we got this nice bounce from 36 to 39%, right? Even while we've had that, we are in the mid-range here for this, right? Actually a little bit lower than the mid-range here between 60 and 30. My main point being is that if this is going to be a full repeat, we might have some maybe short-term window of optimism here, but we may very well still have a ways to go before we get to that peak point of capitulation that essentially serves as that kind of buy the dip opportunity for an altcoin expansion. So we might still be in a broader downtrend here in the altcoin space. And I just take a look at the sector by sector analysis here. You know, you don't need me to tell you this, guys. Just take a look here at, for example, gaming. The GameFi narrative down from 36 billion down here to 15, more than a 50% haircut, and trading generally lower than where we were back here in August of 2024. Worse off here. Take a look here at the all-time chart. Just lower highs from the past. So this to me is a dying narrative here. GameFi is not picking up. AI and big data down from 70 billion here to 34.6 billion, a 50% correction. Take a look at the all-time chart here. This is looking very top heavy here. If anything, we've got a chance to maybe come to 44 billion and create a head and shoulders pattern, with this potentially cooling down big time unless the market really finds product market fit. And then we can see here, meme coin setting a new peak in December 2024 to 137 billion, now down to right under $70 billion. So a near 50% haircut here. And taking a look at the all-time chart, this looks very exhausted. The next range of support is likely down here at $36 billion. If this doesn't hold, we're trying to hold on the prior resistance here of the past. If that doesn't happen, we're likely coming down here for another 50% haircut down here towards $36 billion. It's just what the charts are showing. I think a lot of the silliness in this industry, to put it simple, the gig's up, right? And a lot of that froth in the market is finally unwinding here. People are taking profits, right? While a lot of people are left holding the bag. What I think is important, though, is to not get too sidetracked here, to not get too negative on the market. I'm definitely of the idea that we're in the later innings here for altcoin dominance, right? Altcoins have been in a downtrend since back in January 2022, right? And as I mentioned, during those points of kind of peak capitulation, right, in markets, the important thing we want to look for are buy the dip opportunities when everyone is going to be getting liquidated, everything's going to be exhausted, everyone's going to be knocked out of their positions. We want to look for the value add opportunities. And considering that we're down from 19.49% down all the way to 8.6%, and just even relatively speaking, we're down from 12.2% back in December of 2024, or down from our relative high here at around 13.7% back in December 2023, right? considering that we've seen such a substantial decline over the last year in altcoins, let alone the longer term trend since back in 2022, I'm finally starting to get optimistic here that we could be finding some great altcoin opportunities in the next couple of months. We might have another leg down to go if we face resistance at the 21-day. But the thing I'm looking for here are narratives in which are going to hold up more substantially, that have the serious grounds to be able to actually take off long term. New exciting narratives. I'm not chasing the narratives of yesterday. We saw that with GameFi. It's not looking good. We're seeing even with AI and big data that, and DePIN as well, that this trend is starting to wane off. And we're also seeing with meme coins that there's exhaustion. The market, I think, is hungry for something at least relatively real and substantial. And that's why I wanted to spend some time to talk about our video partner for today, and that's VeChain. Now, VeChain is not a new name here on the DataDash channel. Many of you probably remember VeChain. We covered as far back as 2017. But VeChain is a prime example of real-world implementation of Web3 technology, mainly originally focusing on the narrative of supply chain enterprise, utilizing our RFID technology and NFC technology to be able to fight counterfeiting on supply chain goods that are being shipped across the world, maintaining authenticity and quality standards for products and services. And they already have worked with a wide range of different projects, real world companies and startups on various different efforts. But beyond this as well, beyond its focus on enterprise and focused on supply chain logistics, which has really been VeChain's main focus for the last couple of years and has really pioneered in that industry in the implementation of blockchain tech, they're also pivoting into a really interesting area, potential new emerging narrative in the market. So you got to keep this on your radar, guys. When there's any case for new potential narratives, you want to keep this on your radar and watch the plays that are moving in these industries. And one of those things that they're focused on is DBAN, which is essentially stands for Decentralized Better Action Networks. So this is something that I've heard people kind of talk about here and there, whether it be around carbon reduction or various different types of activities, but essentially utilizing the token incentive schemes of crypto ecosystems as a means for leading real-world change, right? Leading to real-world rewards for people engaging in real-world activities and helping to not only better themselves, but potentially better various industries, or just engaging in better activities for various different trends and causes. And they did this through the recent launch of VBetterDAO. Now, this is something that, again, is focused on that exact concept of DBAN, which essentially is focused on building a network, a protocol ecosystem where new dApps can launch and be able to incentivize good behaviors in the real world. This to me is very exciting because I've heard, again, people float this concept around for a while of kind of incentivizing good behavior, but actually building it in a substantial way that actually is going to be sustainable long term is something that I think VBetter has actually done that I have yet to see any ecosystem really do. And the way that they do this is by actually utilizing crypto governance. Again, crypto governance, especially for a lot of the governance tokens out there, usually don't really have much weight. You know, you can use Uniswap, you can use Compound, you can use Aave, all these different things without really having to use their governance token. But the VBetterDAO's core governance token really plays a role in actually helping to score and essentially allocate future rewards to these various different applications. So the network is playing an active role in determining which applications are going to get the future supply of the token and are going to go towards rewarding various different types of behaviors to these various different applications. This to me is a really exciting example of a potential new narrative emerging in the market. Again, I don't want to speak 100% with confidence here. This is a new concept here, but at the end of the day, this to me looks very exciting to see the initial traction on testnet that they had before launching and what we're seeing right now in regards to the actual development of the protocol and people interacting with it. This is very exciting stuff. When I take a look at the long-term chart here as well, since it launched back in December, this has been one of the top performing altcoins I've seen on my radar. So this is something that, especially as we're seeing a nice pullback here in the market, you want to keep an eye on players that are showcasing strength. Do your own due diligence, guys. I'm not here to say that you have to buy it or anything. The main point here is that at the end of the day, VeChain is making some really exciting moves, whereas many protocols are just kind of doing the same thing. So I like this experimentation. I like seeing respectable protocols going out there and engaging in these new narratives. And this is all a broader part of the VeChain Renaissance 2025 roadmap. So if you guys are interested to learn about that, check out the links down below in the description to learn more. I definitely think it's something worth keeping on your radar at a minimum. But going here into equity markets, I want to bring your guys' attention here towards the broader S&P 500. I want to talk about NASDAQ. I want to talk about what's going on in stocks. Now, we've obviously talked about crypto here, kind of in summary. Our main point here is that Bitcoin could be very well, especially if we break below the 100-day, and especially if we break below the 200-day, which are not very far away. We could be seeing the initial signs right now of a broader pullback in crypto over the next couple of months. And along with that as well, altcoins potentially going through a second leg of capitulation. But when it comes to stocks, we're seeing right now that the equity markets, whether it be the S&P 500 or the NASDAQ, are almost, if not already, breaking to new highs. Now, the important point I want you to keep in mind is that while we're seeing this strength right now in equities, while I do believe that we might have another couple of weeks here where things could really do well, the important thing I want you guys to understand is that I think we're getting very well towards the tail end here of this expansion and are due not only for a correction in crypto, but we're also due for a correction in equities to a large extent. I want to spend some time to take a look here at the long-term chart in the S&P 500. It's been a little while since we revisited this chart, and while we don't need to go into every single detail of it, the thing I want to emphasize is that, especially if this is your first time seeing it, this chart holds a lot of historic significance. It's really helped us to point to where major capitulation points, generational buy the dip opportunities are in equities, and also when they hit their euphoric peaks. And while it doesn't mean that this chart always has to remain true, as some people are theorizing, we may be finally breaking through that line of resistance, I want to indicate that the likelihood that we are going to be able to continue expanding massively over the next year, next couple of years, is growingly thin as we press up against this level. Right? There is a very real chance you have a short-term deviation here, but those opportunities where people think it's a new paradigm, they start rationalizing overt exuberance in the market, can very well be the points where you get badly burnt. And I just want you guys to be made aware of that here and consider that not only is it crypto markets that are likely due for a correction, but also equity markets. We are well overdue for it. When it's going to happen, no one knows. I'm not here to say go short the market. I'm not here to say sell every single one of your positions, but to keep a sharp eye out. And when you start seeing those signs, don't be hesitant to be able to step back a little bit on your exposure. The NASDAQ as well, just for context, has broken through the line of resistance against its dot-com bubble highs and 2021's relative peak. We have now started trading on a higher level here on the big technology names, on a wide range of the broader NASDAQ as a whole. And it's looking again like that deviation setup could be in play here, where a lot of people think it's a new paradigm, we can't go down, even though we're well extended away from the 200 week and the 100 month. Just keep in mind that while a lot of people are getting euphoric, we may be entering into that environment quite soon. I think over the next couple of weeks, we've got a grace period. I think that we're going to come down here into the lower volatility wing going into February. So it'll probably be a great month here. But my point is that as we're starting to really prepare for the big picture, when we talk about a Bitcoin bear, not a Bitcoin bear market, but I would say again, a Bitcoin correction, right? If we're talking about an equity correction, we got to start planning a little bit ahead and get ourselves in the right mindset so we'll be prepared for it. Because if we're just going to be acting as if it's another great day in the market, when those times come, we are not going to be prepared. And a lot of people are going to be sidelined. They're going to be, oh, my positions went down 10%. I'm going to wait for them to bounce up a little bit. And they collapse more, and they go down, and they go down. And that's exactly the trap that so many traders will find themselves in, right? Right now, we are in a favorable environment for equities. The S&P 500 still ticking up to new highs here. The NASDAQ also doing the same, right? Nothing looks bad now. The question is whether or not that environment will start to change here in the near term. You've got oil as well, right? Starting to face serious resistance at long-term indicators that used to be support. The 100-month and 200-week are now acting as resistance for oil twice here on the 200-week, right? And we're now breaking down below the 100-month again. This is a sign again of a slowdown in the demand for oil as a commodity, which is usually an early stage recessionary indicator. And while so far the yield curve has been able to start to again invert again, or not per se invert, but the difference in long-term treasury yields versus short-term has started to again reduce here. And this is again overall a part of a broader trend that we've seen for the last year and a half, right? We're essentially since back here in June of 2023, right? More than a year and a half here. Essentially, we have been continuing to unwind here. So we don't want to treat these as absolute victories. I mean, we can just go absolutely speculate in the market. You'll see back in the past as well, right? There are periods of time where essentially you can have these periods where things slow down and then have continued to accelerate. So just be mindful of this, guys. Watch these different metrics here. And don't ignore the fact that usually when we see the rate cut process beginning, this is when your actual recessions start to come in. It was the same case in 2000. It was the same case here in 07 going into 08. It was the same exact thing here in late 2019 before the COVID crash in 2020. Keep an eye on these metrics. Don't get too euphoric. Don't be chasing all the meme coins out there with all your savings, because you can lose it in an instant. And some of the big heavyweights in crypto will make those exact same mistakes that leave them losing lifetime or generational wealth that they could have happily, been well off on already, but they just got too greedy. Happens every single time, and it can happen to you or I if we aren't careful about it. I only bring this kind of content to you guys because of a couple key reasons. One, I don't want you guys to lose what you've made. People come from all different types of positions. Some of you have been around since 2017 with me and have made phenomenal wealth being early on in this trend of crypto. This is like a once-in-a-lifetime opportunity, right? And because of that, I don't want you guys to lose all that wealth that you built up. For those of you who are new to this channel, who maybe don't watch every single video of mine and have made it this far in the video, I don't want you to get caught up in the idea that there is an absolute guarantee you're going to make a 10x in crypto. That there's a very likely it's going to be the case that you're not going to be making those returns. I know a lot of people are probably telling you that because they want you to buy their bags and their coins that they got in at a much cheaper valuation than what they're pitching it to you at. My main point here is I'm going to be honest with you guys, and I want you to be realistic about expectations. And the other thing as well is that I also want you to make life-changing returns, even if you've already made life-changing returns, or if this is your first rodeo in markets and you really want to be able to make money that you can walk away with and be happy with. But I would say that opportunity is slowly fading away from crypto. It's going into other markets. It's going into stocks. It's not going to just be in altcoins. You've got to be able to diversify yourself beyond what you're used to and comfortable to. And we just recently did a webinar in the Dash Report where for this month, while crypto has been stalling, a lot of the altcoin indices, as we talked about earlier, which make up a lot of the major plays, have just completely flushed down. Major downward price action. A lot of people holding empty bags. We have been making some phenomenal returns this month. I don't mean to say it in like a bragging way, right? But the main point here is that we have been focused for the last year on the shift that the opportunities are coming from the altcoin space, and it's really predominantly in the emerging market leaders in equities, the new wave of companies that are going to become the Facebooks, the Amazons, the Netflixes, the Googles, the Apples and Microsofts of our time over the next couple of years that are in entirely new industries that over the next 5 to 10 years could grow to be behemoths in their own right. Right. So we had, for example, this past month, just a huge return, far outpacing the stock market, far outpacing Bitcoin. So if you're interested in learning about these opportunities, stepping out of the comfort zone, much of what we talk about here in the crypto channel, you guys can check out the dashboard down below in the description. It's our newsletter. We, again, have our trade alerts, our mid-month webinars, the newsletter. It's easily anywhere from 25 to 30 pages usually. Most reports have been actually a little bit more than that. So you get a ton of content, a full 360 analysis on crypto, stocks, commodity, and Forex markets. There's a whole listing of the different offerings here that come with it. You guys can get 20% if you sign up on an annualized basis. If you've been watching this channel for a long time and you thought about supporting what I do here and also the broader vision as well of what we're doing with the DataDash channel, then in that case, it's a great way to support me. And again, it's like less than $1 or a cup of coffee a day. So it's a great way if you're really getting invested in the market to get that additional content that's going to help position you well. And you can always try it out for a month, and then later on, if you want, sign up for the annualized subscription. But again, that's an important thing just to understand here is that those opportunities, the real multiple opportunities, we found many different sectors that over the last couple of months have brought in multi 100% returns. And that's not like some exaggeration. That's the, I'll give one example here. Aerospace and defense sector, a lot of stocks we talked about in like late 2023, early 2024, went up hundreds of percentage points throughout 2024, and especially in the later part. So it's these industries are starting to ramp up here. The small mid caps, the new emerging market leaders have got a lot of room and growth potential. So maybe try it for a month, see what you think. And if you guys like it, again, feel free to let me know. But I would, again, really appreciate it. It's a great way to support the content here in this channel. And beyond that as well, I want to let you guys know, if you haven't already, to check out the GMI or Gonna Make It airdrop campaign for the energy ecosystem. This is one of the upcoming major NFT platform plays that I definitely think you guys should be keeping on your radar. I've been following Tommy for a long period of time in the crypto space. He's a crypto OG by his background. He's been around longer than I have in the space, and he's been focusing on building the energy ecosystem, which is primed around security and its new platform GMI, which not only benefits from the security of energy, but is focused on protecting the royalties for creators and being able to essentially support artists long term, bringing ideally some of the best artists into the GMI ecosystem and really reviving the NFT space, which has been really dead for a long time. So really giving it a foundation to be able to succeed in the long run. There's only 16 days left in the upcoming GMI Season 7 airdrop campaign. If you want to participate, not to mention a lot of these ways you can participate are free. They just require engaging with the platform, sharing word about it. If you're interested in getting some GMI tokens, then I definitely recommend you guys check out the walkthrough that Tommy did on his YouTube channel around the GMI NFT marketplace. You can find that right here on the intro video here. There are a lot of different ways you can boost your rewards, do referrals, social posts. I definitely recommend you guys engage with it. Also try out the platform as well. They're starting to see hundreds of monthly active users, traction really starting to grow. This to me is an early stage sign of something to keep on your radar. But that's it for today's video, guys. If you happen to enjoy this video, consider dropping a like. It's a great way to support all the content we do here on this channel. And again, I come back here to center on Bitcoin in my closing remarks. Right, the moving averages are going to tell you a lot about price. And the short-term price analysis that we do, I think, tells us a lot. But if you zoom out more and more, if you start looking at the long-term time frame, the data science models, what we're seeing here in altcoins as well over the long-term time frame, it starts to become quite clear what's going on. We filter out the short-term noise and focus on the long-term trajectory. And right now, it looks to me like we're not set in for some 80% bear market from top to bottom like we used to see, but we're also not set in for a 1020x like we've historically seen. We're here to probably see something that's going to go into the mid $60,000 range, maybe worst case scenario, 50,000 if things get really bearish. And then from there, we probably continue to move up into the right with much more moderate uptrends and moderate downtrends, where Bitcoin finds its place in the world of the broader financial system. That's what I think we're going through right now. So it's not the exciting industry it used to be, but it's definitely still something. It's still an industry where there are opportunities, and we're going to capture those opportunities when they present themselves, when the right opportunities are presented on the charts. Thanks so much, guys, for letting me ramble as always. I hope this video proved valuable for you. If it provides some valuable food for thought, again, consider dropping a like. And feel free to leave a comment down below on what you think. Get a conversation going. Whether or not you agree or disagree, I would love to hear from you guys. But until the next video, I'll see you guys right back here on Monday. Take care, everyone.